Ken, what did you make of this bond offering that we saw this morning?
Hi, gosh. It is, well, it's a lot of money, but Amazon has a lot of money. It's just more of a trend where these big AI developers are getting funding for the build out, and a lot of it has been funded with their own cash, but they're all kind of stepping up and borrowing too this year.
How much appetite is there amongst bond investors for these big tech company issuances?
There's plenty of appetite. They, you know, I mean, Amazon has long sold debt because, they have a cloud business and a warehouse. They have all the warehouses. But a lot of these companies don't come to market too often, like Meta or Microsoft. And so, but either way, these guys have high credit rating. They generate a lot of cash. It's exactly what bond investors want. And so they've been gobbling this stuff up, with little doubt.
How does that contrast with other parts of the debt market? I mean, is this a uniform story in every different asset class you look at?
Well, so the stock market's been jittery. I mean, we're in a war right now, right? And so, I guess investors are seeing the bond market a little bit as a safe haven. There's been some jitters there, but generally a safe haven. And but in the stock market's been pretty volatile. The commodities market's been very volatile. The other thing is the private credit market has been very in a bit of turmoil in the last few months, and so that has been another place where people, companies have borrowed money for the AI, build out, and so the private credit market has been hit by a lot of redemptions. People want their money back. They're worried about what's going to happen in the future. And so, not that Amazon would need to go to the private credit market because that's more for lower rated borrowers, but that has been a bit of a crack in the AI build out, the funding scheme.
And so for people who don't follow the debt markets as closely, so the hierarchy here is that the companies that are better off, they go to bond investors and they have the luxury of basically trading in and out of these bonds. Private credit is a little more bespoke. You have to like really negotiate these deals. Is that the idea?
Well, it's more like these are loans that go or credit that go to lower rated companies. The bond market tends you can go to the bond market too, but the private credit market has been a better deal for a lot of these companies. I mean, Amazon is a double A rated company, which is just one notch below the U.S. government, and so they don't have trouble. There's no doubt they're going to pay the money back. So the bond investors just glom onto all this stuff. And I'm sure when the sale is done, which will be today, we'll know that it was multiple times oversubscribed and people wanted a lot more than they could get.
Now, we've seen other big tech companies go this route. Meta has done an issuance. I think Oracle,
Yep.
of course. Who are the other names that you're watching? Other names that you think could do these types of issuances?
Well, one of the things, as I said before, the bulk of the AI build that has been funded by the cash that these big companies generate. So a lot of them now have said, okay, well, we don't want to use all our cash. We're going to borrow some, and they get good rates, and it makes sense. You know, uh, there's a bunch of companies that could borrow more. I mean, Meta could borrow more. Microsoft could borrow.
Right.
Um, there's no shortage of demand for them, and it's just a matter of them balancing their own corporate financial situation. Nvidia has been a borrower, they could borrow again. All these guys. I mean, the most interesting one was Oracle, which came out and borrowed earlier this year. There've been worries about them spending too much, but what they did was they borrowed, but 25 billion, but they also sold 25 billion in stock. And like none of these big guys usually sell stock because their stock is, so valuable. So it's much cheaper to borrow. But Oracle told the bond market essentially, listen, we're not going to go and hit you up for all this money. We're going to keep our credit rating solid, and we're going to actually dilute stock investors to get this money. So that was the interesting play. None of the other big guys are going to have to do anything like that.
Was it a smart play in your mind, in your opinion?
Well, it was a smart financial play. The underlying issue of how much they're spending on the build out and are they taking on a huge amount of risk is another question.
Right.
They have much less financial capability than these big guys, and so to go toe to toe with them could be a problem. And so they're seen as one of the riskier plays in the AI build out. And it's, so that's gonna be the question. I don't think there's a doubt that they can pay down the debt. I mean, they have a huge software business, a database business, but that's a more questionable one. The rest of the giants, they could borrow all they want.
Great. Well, Ken, I want to thank you for coming on. I imagine we'll see more of these, and so I anticipate we'll have you on more and more. That is Ken Brown, our finance editor here at The Information.